Hey guys, Omar here, broker and CEO of Alden Mortgage and OMA Realty. So have I got a program out for you, especially for all of you who have had difficulties in 2020, 2021, 2022 with, rental, some of you went into kind of missed a few payments here or there. Let's just not sugarcoat it. Let's go ahead. But you still want to be able to go ahead and rent to own, right? You want to be able to own a property. And this goes for people who are first-time home buyers, people who are not just sure that they want to go ahead and purchase a property, but they still want to have that option to. So we have a lease to own option available to you. Now what I'm going to do is I'm going to go through some of the most boring stuff, okay? Some of the most boring stuff. In the meantime, I'm going to go ahead and try to make it a little bit exciting for you to watch, because God knows these videos sometimes they become a little dreary and they become a little bit not fun, especially watching a guy sit here on his ass in his office, in his little studio, trying to explain to you mortgages and home ownership, right? It ain't that fun. I'm not going to be one of those ASMR guys where I'm going to be like, so we were going to talk about it. No, we're not going to be like one of those. It's not going to be it's just going to be straight, cut it dry. Let's get on with it. So this is actually going to be a program. This is going to be an assumption program through the FHA. Okay. So this will be all under FHA guidelines. So you're going to say, hey, Omar, what's FHA guidelines? What I'll do is I'll go ahead and put an FHA guideline complete thing over here. I did one. I tried to make that one fun too. I don't know if I did. I haven't even seen to see if there was any views on it. There's probably like none. Nobody watches my videos, and if you come across it, damn, I'm really surprised. And hopefully you like, share, subscribe, all that other good stuff. So let's go ahead and get on with it. The FHA, okay, we underwrite these programs. So let's say, for instance, you want to go ahead and get into a house. You want to go ahead and purchase a house. What do we do first? First, what we do is we pre-approve you. We pre-approve you and make sure that you fall under the guidelines through which we are going to end up selling this mortgage-backed security to. In this case, it's going to be through the Federal Housing Administration, which is also known to most of you as FHA. FHA is for everybody because this requires really low down payment. It's 3.5%. You could go ahead and get into the house whenever you want to. And let's say, for instance, you don't like it. Our program that we have, if you don't like the house, well, no harm, no foul. You go ahead and be on your way. We'll go ahead and assume all the risk on it, and then you could just go and get yourself another one. Now, are you able to do this all over again? Absolutely. We will do this as many times as you'd like in order for you to get into your new home. Now, what are the benefits of what we have to offer? Where you get to go ahead and lock in your rate, just like a real mortgage does. You don't have the mandatory requirement to go ahead and stay in that property. We don't require you to just, assume the mortgage, but just like a regular mortgage, you are going to have a 30-year mortgage. Everything, the payments, everything is going to be based off of 360 payments, and we will lock that rate in for the duration of your stay. We have down payment assistance programs. Now, what's a down payment assistance program? Down payment assistance programs are like, if you don't have money for the down payment, we have assistance programs to where we get to go ahead and put, essentially it's like two loans against one, right? So we take one loan to go ahead and cover the principal, what FHA requires, which is at 96.5% total loan to value. Then we have 3.5% down payment assistance program, which is actually just a second loan, which we tack on to go ahead and help with the down payment. Now, these are going to be all at the end if you go ahead and assume the loan, okay? If you assume the loan. If you do not assume the property, if you do not want to lease, if you just want to lease it and you don't want to end up owning the property, let's say for whatever reason that you don't want to go ahead and own the property, you're like, I'm unsure, I don't know, you know what, I'm going to go and get a job somewhere. Or it's really good for people like, let's say, for instance, you got relocated and you got a new job someplace and it's a completely different career field. Because if you're 2 years, so whenever you're doing a mortgage application, you have 2 years worth of taxes that we need. And those 2 years worth of taxes, you could jump around as many jobs as you want as long as you stay in the same career field. But let's say hypothetically you jump from one career field to another career field in a different city or whatever it is. Well, this program is really good for you. You could go ahead and lease that property for a year, see how the job is working. If the job is working out really, really well for you, everything is all hunky-dory, then boom, you got yourself a house. We could go ahead and finish that up, get the mortgage note set on over to you. Title paperwork will be all under your name, and you are no longer a leaser, you are now the owner. We have now the assumable mortgage that we have on these products. It could be at the end of the lease period. It could be multiple lease periods. It could be almost at the end of the term. This is up to you. You could go ahead and protect yourself, which is probably the whole name of the game, is you want to protect yourself from being priced out of the market, which we kind of did price ourselves out of the market. Currently, it's stupid. But if home prices still continue to rise, this is a great, valuable, like this is awesome for people who are like, you know what? I'm not going to speculate that it's going to go that much higher, or I am going to speculate that it is going to go much higher. If you are speculating that it is going to go much higher, then this is a great program, especially if you're like, you know what, I'm speculating that it's going to go much higher, but I don't want the risk of getting myself locked into a house. I don't want to buy the house, but if I'm going to rent, let me just lease it, and if I decide that I'm going to go ahead and buy it, well, then you're just going to go ahead and buy it at that cost, at that rate. Everything is going to stay the same. That's why we have these lease-to-own programs. And then, for instance, if you stayed in this property, this is another really, really good part of this program. If you stayed in this program, let's say you went ahead and leased this program for the next 5 years. Well, the amount of payments that you put into the property, well, we will go ahead and dump that into the total equity that you have built up in the house, and then we will go ahead and qualify you based off of that. Well, we don't requalify you, but we will go ahead and take all of that money that you put in, and we'll put it towards the principal of the house. Minus interest, of course, because we will be running this off of an amortization table, and this will be off of 360 payments. So whatever principal that you paid within that 3, 4, 5, 10, 15, 20 years, whatever it is, we will go ahead and put it towards the total cost of how much we assume the property for, and this way you are in equitable position whenever you purchase that house. So this is like one of those things where it's like a no harm, no foul type of thing. If you like the property, cool, you go get it. If you don't like the property, cool. It's just like renting an apartment. You go ahead and say, you know what, I'm not going to re-sign my lease. I don't want to do this anymore. I'm going to go someplace else. Sure, no problem. Go be on your merry way. No income or asset seasoning is required for this. So what is no income? You're going to need income. You're definitely going to need income. This is just one of the guidelines. Now, what we mean with no income is we get to do what's called asset depletion loans, which we could go ahead. It's either or, right? You have to have some sort of income coming in, whether we look at your bank statements, whether you have total, like let's say you have $1 million worth of assets that you're sitting around and you want to use that to go ahead and qualify this. So, but you have no income coming in. Then we got to go ahead and go from there. And then asset seasoning. Asset seasoning just means, seasoning, whenever in the mortgaging world, if you ever hear seasoning just means that it has to stay in an account for X amount of time. Whether it's 3 months, 6 months, 12 months, 24 months, those are kind of typically the stepping stones of exactly what we need seasoned. But your income doesn't have to be seasoned. We do need income. Variable, of course, like I just said, the asset depletions, your bank statements, whatever way that we're going to go ahead and approve you. There is no seasoning based off of your assets that you have in your account. So let's say you get yourself a down payment, like let's say you're getting a gift, right? A gift fund is just like, hey, Dad, can you give me $50,000 to go ahead and put a down payment on this house? Sure, son, no problem. Here's 50 grand. As soon as you put it in. Now, under Fannie Mae and Freddie Mac guidelines, there is seasoning required. I think last time I checked, it's about 3 to 6 months, somewhere around there, depending on the type of account, and how long you've had that account open, and what kind of deposits you typically make. But typically it's around 3 to 6 months that you would need those funds seasoned in those accounts. Now, what are the requirements for these programs? Let's get my little cheat sheet out here. We are going to go through Equifax. So if you go into, like, let's say you go download Credit Karma, go download whatever you want to do, we need 550 credit score at least. And you're like, holy god dang, man, that's super, super low. But 550 is minimum. Are you supposed to stay at 550? Absolutely not. Please, for the love of God, don't say 550, because like I said earlier, we will be running this off of a pre-qualification on our FHA guidelines. So if FHA guidelines under that credit score gives us an increased rate, you're going to get charged that increased rate as well. So remember, fix your credit, get that sucker up there, because you don't want to get down into that nether region. And if you are in the 550 and you're like, you know what, I would love to go ahead and do that, this has to be on a clean application. What a clean application means is that there cannot be any evictions. There cannot be any late fees. There cannot be debt that you have to still pay off that's like, you know, that's going to throw us off on our debt to income. You have to have a clean application. Your credit report has to look immaculate. Your credit has to be, and usually when people have 550 credit scores, you're not going to have, you could still have immaculate credit on your history, but still run a 550 because that's based off of credit history, right? Sometimes credit history is pretty low. You really don't have much. And if you don't have much, then yeah, you're going to probably have a low DERN score. And that's what I mean by clean credit report. No bankruptcies, no foreclosures, and or short sales. We could always get around the eviction thing by, just so you know, if you were a tenant and you were renting, we could kind of get around the eviction thing as long as there's not going to be any other money judgments afterwards. So we will be looking at that as well. So just make sure that you know about that. We are going to need at least 24 months worth of on-time housing payments. We're going to need it. Whether you had a mortgage, whether you have a rental, whether you have something other than that, but we are able to go ahead and do some exemptions. That's why I stated before that we could kind of get around that stuff because, as everybody knows, we had an eviction moratorium. And in conjunction with that eviction moratorium, there was this silly little thing called the coronavirus. The coronavirus gives us a very, very good way of kind of, you know, fixing that little bit of a gap if you were late on one of them. Loans over $500,000. If you are looking for a house or a condo or anything and it is over $500,000, you know how you have a deposit when you pay for, when you get a rental property, right? Whether it's first and last month or it's like, you know, first, last and deposit or whatever it is. If it is over $500,000, we will be requiring a 2% down payment on that. At bare minimum. Standard income documentation. What is the income documentation that we need? If you are a W-2 employee, we're going to go ahead and need your W-2s for 60 days and your most recent pay stubs. Self-employed borrowers, we're going to need your 1099s, your most recent tax return, year-to-date P&L, 2 months business bank statements verifying cash flow, and a copy of your business license. If you are a new, if you are a W-2 employee, but yet you got new employment, we got that too. If you have new employment, we just need a letter from your employer confirming your start date, your salary, a pay stub, and we need some sort of verification from your human resources department, which we'll go ahead and do through a third-party company. I-10 eligible. Of course, if you are an I-10 person, we do have eligibility for that, and we just need an employment confirmation letter, which a lot of the stuff that we do on the lending side of things, it's mostly like sending things out for verification. So if you do have a new job, we're going to verify it, and we're going to go ahead and do that with a third-party company. Your max debt to income. Now, this is one of those ones that are very, very important. Max debt to income is going to be 38%. Payment to income. That is going to be only the mortgage. Front end ratio on Fannie Mae and Freddie Mac is at 37, so it's a little bit increased. Now your total obligations as your credit card, your car notes, everything that we have, we cannot increase over 50%. There are absolutely no exceptions, except that there always are exceptions. So if you are one of those people that have 50% more loan obligations, then yeah, just hit me up. Let me know how big it is, how much it is. I'd be more than happy to help you out. We can make an exception to some of these rules, and let's see if we can make one for you. So the biggest thing with these types of programs are there going to be any additional fees that we will not be, that is not typical in a normal application, at least for us. I do not like charging processing fees. I do not like charging admin fees. I actually don't. And on any Fannie Freddie Mac program, majority of the time, unless you have like some crazy stuff that we have to process and we're going to have to call for backup, typically those cost about $500. But on this, you are guaranteed to pay. You are gonna have to pay $895 administration fee, and this is going to be to the company that we're selling to the wholesaler, which is also going to be a mandatory $595, which is going to be an administrative processing fee, and this is to process all your paperwork. And what do we mean by processing? It is getting all your verifications, because we have to pay people to verify your employment. We have to get people to verify your mortgage, your rental payments if you had those due. We have to get people to verify whatever that we have to go ahead and verify through underwriting. That's what we have to do, and we have to pay other people to do this. So these are going to be one of those. This is going to be $495 administration fee. This is separated from the processing fee and the wholesale administration fee. And so to go off with those exceptions, I'm going to go ahead and jump back and forth. We're going to go ahead and go with the exemptions. So what are the exemptions that we could go ahead and get onto? Well, first one, it's going to be student loans. Student loans, if the payment is included in the debt to income, if deferred, not included. So make sure you defer your student loans if you have one. Collections and judgments, amortized over 36 months of the lease terms. If you are in collections and if you do have any judgments, we will go ahead and amortize it, which means that we're going to take that payment and we're going to go ahead and see what it shows up on your credit, and then we're going to go ahead and adjust it accordingly and put that to your debt to income. But work on those judgments. Tax liens, same thing, over 36 months. We're going to go ahead and include that in. Charge-offs though, not included. We don't have to worry about it. Now, what kind of cash is required to go ahead and get into one of these things? Well, no down payment other than over $500,000 is really required. There is a 1% inception fee. That is going to be pretty much your down payment. There will be an underwriting fee, of course. And then, of course, there's going to be closing costs, which some of those closing costs we could actually roll into the loan on a down payment assistance program, which these are things if you don't really, you're going to have to pay for a lot of this stuff anyway. You're going to have to go ahead and pay for like your down payment. So if you are going to plan on staying here, cool. If you don't plan on staying there, or you just want to lease for the duration of the time, well, you already know what your payments are. You don't have to really worry too much about a lot of this stuff. So that is all she wrote on our lease to own property. Do I have anything else? Oh, there is more. I totally forgot. Appraisals. We are going to need an appraisal. All the normal everyday stuff that you would do on a home purchase are all still going to be included. A, you're still going to need an appraisal. B, you're still going to go ahead and make sure, we're going to have to go ahead and look at how, what year the house is built, because it still has to fall under the FHA guidelines. We still have to make sure that it's within the loan limits of FHA. And if you want to know your loan limits within FHA to see what home price that you should stay around, link in the description below. I'll put it down there. You can go ahead and look at the county and all that other stuff. Real estate compensations. I mean, if you're selling the house, it doesn't matter. Buyer agents, they make it off of the seller agents anyway. There is still seller credit. So the negotiation process of getting into the house all stays the same, except there's one thing that you don't have to worry about. There is no obligation for you to stay at that property. You could lease it. You could go ahead and stay, and it stays fixed. That's the best part. If you live in an apartment complex, you all know the struggle. The struggle is real. You know that your rent goes up every single year. Well, why even worry about that if this is an option for you? Now, as far as your monthly payment, because obviously everybody's really concerned about their monthly payments, and what am I actually paying for? Well, pretty simple. You have an HOA, you're going to pay for the HOA. You have your principal, interest, you're going to have to pay for that too. Like renter's insurance that you would have at a regular apartment complex, you're going to need updated homeowner's insurance. Other than that, that's pretty much it. That is all she wrote. Well, if you like the content, if you want to go ahead and apply, link in the description below. And for up to 50% commission rebate, because God knows you'll need some help trying to get, if you decide that you want to stay in the property, up to 50% commission rebate on your next real estate purchase, 0% listing fee on your next home. And for this program or any other mortgaging program out there, let me beat your big bank. Let me be that guy that gives you the options that normally you wouldn't have. Link in the description below. I hope this wasn't too drawn out. I really appreciate you guys watching. Until next video, guys, thank you for watching. Oh my God.